Yo, what's going on guys? Hope that you're all doing well. In today's video, I'm going to show you the exact framework which I follow every single new trading day and trading week. And this is how I frame my high time frame bias, how I find my draws on liquidity, how I align the time frames to find the best entries, how I actually enter a trade, and so much more. And I'm going to be explaining all of that in just under 10 minutes. So without further ado, let's jump straight into it. 10 minutes starts now. Okay, so first things first, I like to open the charts from 9 to 10:30 a.m. That's the only time that I'll be on the charts all day, that specific 90-minute window. Reason being is because, of course, 9 o'clock till 10:30 a.m. is Q3 of the daily cycle, which is the New York AM session, and that specific 90-minute window is also Q3 of the New York AM session. So therefore, we've got overlapping quarters, Q3 within Q3, which leads to higher probability entries, and just in general, more cleaner price action. We've also got that 9:30 volatility coming in within that window as well, which more times than not gives me a clean entry. You can spot clear manipulation and so much more. Okay, so first things first, high time frame. This is super important. If you can't identify your high time frame draw on liquidity, if you don't know where price is headed, better to stay away. Okay, the best trades will be the most clear ones. So if you can't identify where price is going, then just stay away. So draws on liquidity, of course, previous X highs and lows. This means, for example, previous week high or low, previous day high or low, previous session high or low, and so much more. Okay, obviously it's fractal. It can be the previous micro session high or low. It just depends on what time frame you trade on. And then high time frame gaps. Obviously, these act as a good magnet for price as well. You know the price likes to go from liquidity pool to imbalances back to liquidity. So if you can identify where price is drawing towards, is it drawing towards a liquidity pool or an imbalance, then that is very, very important. Okay, and then also previous sequential SMT or SMT highs and lows. So we know that SMT highs and lows have a lot of liquidity resting above and below them, because essentially all an SMT is doing is engineering lows. So that asset that's creating the failure swing is leaving those low resistance lows and highs for price to then target later on down the line. Okay, and then the next thing is order flow. So once you know where price is headed, you want to try and align that with the order flow. Okay, so for example, if you're targeting the previous day high and the order flow is bullish, then that's amazing. Okay, the high time frame is lining up perfectly, and the way that I like to sort of gauge the order flow, the high time frame order flow, is using the high time frame cycles. So if you're a day trader, you want to be paying attention to the weekly cycle and the monthly cycle. And if you are a swing trader, so you like to hold trades for a longer duration, then you want to pay attention to the monthly cycle and also the yearly cycle. Okay, of course you can pay attention to both of those as well, being a day trader, but it doesn't really matter as much. Okay, because you're sort of trading those daily candles, whereas maybe entering on the weekly time frame if you're a swing trader. Okay, so weekly cycles, monthly cycles. Do we have a bullish monthly cycle in play? If we do we have a drawn liquidity which is higher? Cool. Now we've got everything aligning. Okay, we've got a bullish sequential SMT in line with a clear drawn liquidity of the highs. Okay, the next thing is high time frame PSPs. So we know that PSPs can tell us when price is about to reverse, or we can also use them for continuations. Okay, so if we get a weekly time frame PSP, this can give us our weekly bias, because that means the following candle number 3, is likely to trade away from that PSP. If we get a daily time frame PSP, then this can give us our daily bias. And then if we get a 4-hour time frame, this can give us our session bias. Okay, so for example, if we get a 2 a.m. PSP, then we can potentially expect a sequential SMT on that PSP high, or we can expect the 6 a.m. candle to trade away from that PSP. So that means 2 a.m. PSP is pretty much the London session, and then that 6 a.m. candle, the one after the PSP, is the New York AM session. So that means if there's a PSP there in the 2 a.m., then 6 a.m. is likely to trade away from it. Okay, so that means we can gauge our New York AM session bias all from that PSP. And then the final thing for order flow is candle closures. How did the previous candle close? Did it total suit the previous candle, or did it close above or below the previous candle? Okay, so if we're, for example, on the daily time frame and we're looking at, I don't know, Monday's candle, and we're trading on Wednesday, so that means we want to see what Tuesday did. Okay, so did Tuesday's candle close above Monday's high or low? If it did, then we can expect Wednesday to be a continuation. Or if Tuesday ran above Monday's high or low, but then pulled back and closed inside of Monday's range, then we can expect Wednesday to sort of be that reversal. Okay, so obviously the reversal may have been initiated on Tuesday, and then Wednesday can continue in that direction, right? So yeah, that's how I like to gauge drawn liquidity and order flow. Pretty much just sequential SMT, PSPs, and candle closures, okay? So once we can identify all of this, and once we're in line with all of this, then that's when we drop down to our mid time frame, okay? So now the question is the mid time frame aligning with our high time frame draw / order flow? If the answer is no, then this means we're probably dealing with a high time frame retrace. And then the question that we've got to ask ourselves is, do we have a clear high time frame PD array to retrace to? If the answer is no, then we have no trade, okay? Because we want to preferably be trading in line with a high time frame order flow, unless we can identify that the mid time frame is retracing to a clear high time frame PD array. If we can see that it is, then we can have a potential trade, okay? So next thing is, do we have the mid time frame manipulation in direction of the high time frame PD array, okay? So this might mean that the higher time frame is bearish, but then for example we may get a daily cycle bullish sequential SMT, and we've got a bearish, I don't know, maybe a daily gap or a 4-hour gap. So as long as we've got that bullish mid time frame manipulation being a sequential SMT, and we have a clear PD array maybe resting above us, then we can potentially look to trade that mid time frame back up into that high time frame PD array, okay? If there's no PD array there on the high time frame, then just give it a miss, okay? So if there's no clear direction PD array, or maybe it wants to retrace back into a premium or into a discount, then that's okay as well, okay? So if the answer is yes, do we have a mid time frame change in the state of delivery? So this is basically saying, do we have a mid time frame sequential SMT in line with that high time frame PD array, so retracing back up to it? And then if we do, we then need to wait for a change in the state of delivery, okay? So a candle closure above or below that candle that formed the mid time frame sequential SMT, mid time frame manipulation. If we don't have a change in the state of delivery yet, then we have no trade. If we do have a change in the state of delivery, then all we're doing from there is looking for our low time frame entry, which would be at least a low time frame sequential SMT. Because if we're not trading in line with a high time frame order flow, then we want to see at least 2 stages of sequential SMT. So therefore we have our mid time frame one, which could be a daily cycle, and then maybe we've got a 90-minute or a microcycle sequential SMT, which forms inside of or after the mid time frame change in the state of delivery, okay? So let's imagine we've got a bullish daily cycle sequential SMT. We've got a 15-minute candle closure above or below the candle that formed the sequential SMT, and now we're looking for either a 90-minute or a micro sequential SMT in line with the mid time frame, okay? So bullish daily, bullish 15-minute CSD, and then a bullish micro or bullish 90, okay? And of course that high time frame PD array still needs to be the clear draw. If it's not clear, then stay away from the opposing order flow trades, okay? So do we have a low time frame sequential SMT? If the answer is no, then we have no trade, because this means we only have one stage of sequential SMT and we're trading against the order flow, which is not what we want to be doing. If we do have a low time frame sequential SMT, then the final question we need to ask ourselves is, do we have a low time frame change in the state of delivery, okay? If the answer is no, we have no trade. If the answer is yes, then we have a trade, okay? So this means bullish, for example, like I said, bullish daily sequential SMT, 15-minute change in the state, bullish micro sequential SMT, and then a 1-minute bullish change in the state of delivery, okay? Then we have a trade, and we've got to be quick here. We've got 2 minutes. If the high time frame, if the mid time frame is aligning with our high time frame draw / order flow, if the answer is yes, have we had clear manipulation on the mid time frame? We want to see this at least, and then do we have at least one of these cracks, okay? So do we have, for example, a bullish weekly cycle sequential SMT, which can be our high time frame, and then we need to see sort of like a 15-minute crack, so a 15-minute PSP, 15-minute sequential SMT, which would be a 2-stage, bullish weekly, bullish daily, or do we have a 15-minute SMT fill, okay? If the answer is no, if we have no mid-time frame crack, then we have no trade. If the answer is yes, then that's when we can look for our low time frame entry model, okay? So this is ideally what we want to see. We want to see the high time frame, clear draw on liquidity, clear order flow where price is heading, and then we want to see clear manipulation on that mid time frame. So maybe we've got a bullish weekly like I mentioned, and then maybe we get a 15-minute PSP, and then what we want to look for is then finally our low time frame entry model, okay? So my entry models that I like to use mainly is low time frame sequential SMT plus a change in the state of delivery, low time frame sequential SMT plus PSP, and then a true order block entry, or sequential SMT first present of fair value gap after the sequential SMT, and then an SMT fill inside of it, okay? So ideally the best type of situation would be clear high time frame draw, clear high time frame order flow. Let's say we're a day trader, bullish weekly cycle sequential SMT, and then we have a high time frame chain and state delivery, and then we've got a 15-minute PSP, and then maybe we see a micro sequential SMT occur inside of that 15-minute PSP, and then we get, for example, a 1-minute chain in the state delivery, and then we can target opposing liquidity in line with the high time frame order flow. And we have 5 seconds remaining until the time has finished, so we actually completed it in under 10 minutes, and there we go. Cool. So there we have it, guys. That is pretty much my step-by-step checklist that I look at every single new trading day or trading week, and I'll also put the link to this whole entire flowchart in the description down below, so if you guys want to copy this and follow it day to day, then feel free to do so. With that being said, we're going to wrap it up there, guys. Hopefully you guys enjoyed. Let me know if you do like this type of style of content in the comments down below. Also let me know what other trading videos you would like to see, and don't forget to check out my socials, link below in the description, as well as my premium membership group and also my very own quarterly theory indicator. See you guys later. Take care.